I just earned a payout from a prop firm. It took a lot of hard work, time investment, and very strategic studying. I've tried backtesting in the past, but if you're anything like me, my results suck and it doesn't help me very much. For me, it encourages pattern trading. I can skip through time quickly and rush my trades, look for the pattern, and move on to the next one. I ended up focusing on the number of trades I could get in versus finding quality trades, which is way more important. This led to my results being horrible. I got a payout, but my results in backtesting are still unprofitable. In sharing my poor backtesting results with the community, like TTrades, Garrett, and Kiko, they discussed and led me on to a much better method called Hindsight Testing. Hindsight Testing allows you to train your eye to look for the winners after they've already happened. It's not about testing your edge to see if it works or not. It's about seeing what a win looks like. So in this video, I'm going to go over the exact process and procedure I take in order to complete this study, collect the data I need, and what I believe has led me to achieve a payout. I've done around 80 trades in the past using Hindsight, and it has helped me so much that I'm going to do another 60 trades and share all of the results on my X. I post a lot on there. I post my entire journey. I'm completely transparent. I post every win. I post every loss. For that project, I'm going to be using TradeZella. After I mark out the winning trade, I'm going to rewind time and take the same trade so I can pool certain analytics such as entry times, exit times, hold duration, stop loss size, take profit size. Objectives for Hindsight Testing. The first objective of this study is to train your eyes to spot winners. If our goal is to win in the markets, we should probably know what winning looks like. Hindsight testing is significantly better than backtesting because you're practicing without performance pressure. It allows you to strengthen your memory through observation and journaling. Finally, it helps you to identify realistic targets. It can be tempting in live markets to shoot for outlandish price targets. The more we study what actual winning trades look like, the more we understand what our targets should be in order to win in the live markets. I'm going to be using TTrades fractal model. It's the model that I trade with and I found success with it. It's how I got my payout. So let's jump straight into an example of how I do this. For basic setup purposes, I recommend you use the exact same colors that you trade with. I trade with blue and yellow colors. I think they look cool. I know a lot of people like to use boring black and white candles. So for the purposes of this video, I'm going to be using the black and white candles. When using TTrades fractal model, I always start with the daily. It's a multi-time frame analysis, and I start on the daily to develop a bias, and then I drop down time frames, making note of things as I go. I typically save screenshots of things so I can go back and look at the data. So to start things out, I like to have ES on the left and NQ on the right. I like looking for SMT, so I like having both of them pulled up. To start, I mark out liquidity. What is the important liquidity and what do I see? So this line right here, I would consider this to be a relevant high. Down here, this fair value gap, I would consider that to be a relevant low. I would also mark this to be a fair value gap. So we've got a fair value gap, we have a relevant low. An important element in his model is equilibrium, so I'm also going to mark out equilibrium of this candle and just take notes of things I see. And I'm going to do it on both of these because SMT is important and we can look for that as well. Actually not going to mark this as a relevant low because I just want to keep it a little bit clean. You don't want to make this too messy. It does want to be a clear picture so we can clearly identify this is a fair value gap and know that that makes it a relevant low. And take note of things as you go. I would say that this is a strong rejection. So I'm going to type that out. I'm going to say, yeah, this is a strong rejection. Look, we go all the way down, even past the fair value gap, and we close all the way back above it, making a bullish closure. Then we go back down and we close out again. So what else do we see? This is a C2 in the model, C3, C4. This is the C4, and this is the day that we're looking at. We're looking at Tuesday, June 3rd. So mark this as C4, and then also mark this candle as a C2, and then just as important, looking for SMT. Are there any SMTs leading up to this day that could give a hint that a certain asset is stronger than the other? I don't see anything glaringly obvious besides here. This doesn't tap equilibrium, but ES does. So I'm just gonna make a note of that. And then after I have my chart marked out, I've taken notes. I'm gonna make a short bit of text at the top just to summarize what I see. On the daily time frame, looking to trade the model higher into the relevant high in bullish expansion. NQ and ES are both respecting EQ of the previous candles. NQ appears to be slightly stronger. Once I have my text at the top, I'm going to go ahead and copy that text, and I'm going to throw it into the journal, paste that in here for later. So after I have this, I'm going to go ahead and also save this, just so I have the picture to look back to if I want it. Because now I'm going to drop down time frames. I'm going to go to the 4 hour, and I'm going to delete everything and start over. Gonna do the same exact process. What can we find? First off, what's jumping out right here is SMT. So I'm gonna mark that. We can scroll out a little bit more. We still have this relevant high that we haven't tapped into. So I'm gonna mark that out. What else do we see? This is the opening London candle. This is forming a London reversal and a New York continuation, it looks like. So this is actually a valid C2. I can go ahead and mark this out as it being a London reversal because that is important. And then this is the New York continuation. We could also identify the phase of price here. This is not a lot of volume right here. So we see we have this large expansion on both time frames, and then we have this small retracement. So let's go ahead and make note of that. Do I sound like TTrades? That's not my goal, I swear. I've just watched too many of his videos. Retrace. Expansion. And then we have the continued expansion here. All right, so looking to go higher. Pretty clear the phases that we've got going on right here. Expansion, retracement, expansion. Great. Now we go ahead and write the same thing here. 4 hour. So I have my little blurb here. I'm going to copy that and post it into this journal. Typically, in the past, I've posted this in a Discord chat and just had a massive thread of data. If that's something you want to see, it's a huge journal in the lens and it's open access for anyone to see. I'm going to save this image as well. So this is good. Now I'm going to drop down to the next time frame and I'm actually going to look for the setup. Because I know that NQ is stronger, I'm going to look for a trade on this one specifically. I don't see any clear hourly setups here. So I'm going to go ahead and drop down to the 30 to see if I can find the model. Okay, so the setup actually appears on both. And since it appears on both, I don't need an SMT to enter. And since I do not need an SMT, I'm going to full screen NQ and just focus on NQ. We have a relevant high here. Same process as before. We're just making note of things. Engage, high, retrace, continue, expanding. What else can we see happened here? We can take note that this was quick. We didn't spend a lot of time down here. It was a pretty quick retracement. And of course the model that we look for. Let's make a little bit of text. Same as before, just making note of things. This is a tool I really like to use. It helps me gauge volume. So I can go back to, say, 4 a.m. and look at how much volume has been used, especially into the open. I have just always used the percentages. That's just what I'm used to. So I can go look here and say, okay, we've utilized 0.83%. That's a decent amount of volume, but it's not crazy. So we can look for continuations, and that just helps me take note like I did up here. Copying, pasting it in the journal, downloading the image. Now we look for the entry. And in the entry, it is the exact same process where you're simply taking notes. The same process as before. I'm not going to get too into the weeds here, but we can find the trade. So for me, my stop would be probably right here, 0.24%. That's usually around the stop size I'm doing. And then I always go for 1 to 2R. So this would be my trade. Entering the trade off rejecting. Copy that, bring it down here. Great. So I've got the trade. Now something new I'm going to be doing is I'm actually going to go back in time and place this exact trade so I can collect data. TradeZella will automatically collect all the data I need. To do this, I'm going to click place an order. I'm going to go back and rewind to 10:51. Okay. All right. Fast forward a few minutes. Great. That's exactly what it's going to look like. So now I can go in here, place my advanced order. These are just my settings. So risking 206, buy it. We already know it's going to win. We can just fast forward. We know what happens. Great, we won the trade. No way. This little bit of data has been recorded. It's recorded the stop loss size. It's recorded the time duration. It's recorded the take profit size. It's recorded all of the data for me, so later I can go back and I can just look at all of those metrics and find what more winners look like for me. So that would be the end of this hindsight. Of course, saving this photo. So next trade. Let's just go ahead and go to the next day. This is an important one because sometimes you're not going to find a trade, and it's important to then mark down the signals of why you shouldn't take the trade. It's the same idea as before, but you're going to be looking at the signs of like, hey, this is why I shouldn't take this trade. This is a sign that leads me to believe this is not a good trade. So starting on the daily, once again, same process we just did. Okay, great. Something I forgot to mention, go back in here, and after you've made the trade, copy all of this data, and if you have a trade that you placed on it, edit the note, and in here, add all of your notes you just took. That way you can go back to the trade and identify all of the notes. Then back to the session notes, just start a new one, and it's important to date these. So these are the things I marked out. It's a C5, so I'm not going to trade it. There's a rejection wick here. So we can see that we just took out previous day high, and we rejected it, and we closed a little bit lower. There's not a lot of volume here. We have a relevant high that we're still targeting. It's the 5th candle in the sequence. There's our C2 from the day before. And this is the note that I have. Saving the photo and dropping down a time frame. What do we see here? This looks like a mess. This looks disgusting. Now, if we were coming into this day looking for a trade, I'm looking to trade between these two candles. We took both sides of this candle. We didn't enter any clear POIs. We didn't even sweep previous day lows. We can identify some SMT within here. But looking at this initially, this just looks gross. We do have this higher high to target. It is a valid target. But as we can see what happens, we don't go anywhere. And that's the beauty of hindsight. We can recognize that we didn't go anywhere and say, okay, why didn't we go anywhere? Why did this happen? There's not always an answer, but we can look for reasons and increase our win rate over time by recognizing these patterns initially. This candle, if I was trading it normally, I would say this looks extremely bullish, but looking at the rest of the day, we can know that this is a pretty indecisive candle. We sweep the low, we sweep the high, and we don't go anywhere. And we can see that this plays out and leads into a pretty indecisive day with no volume. It is important to continue to do the days where you don't take a trade, so you can look for signals, signs like this candle that lead to a day that you wouldn't even take a trade on. It's important to recognize these days and not skip them. Half the battle of winning in trading is knowing when not to trade, knowing when to skip the day. And this is a day where you would want to skip it. And this is a sign, this candle, that would tell you that. But we continue going and dropping down the time frames and taking notes so we can look for even more hints that this day is not a great day to trade. So we'll continue. We make our notes still, and we bring it down here. Great, now we drop down again. This looks disgusting. It looks gross. My trading day goes from 9:30 to 11. I don't like to trade the open. Right here, this is what I would be seeing. On the hourly, I don't see my setup. I can go to the 30-minute and look again. This looks so bad. But only in hindsight. That's important to know. This looks so bad, but it's only in hindsight. Because if you go back, I would only be seeing maybe this much. And I would say, whoa, look at this massive rejection. It looks like we're going to shoot up super high. Or like, look right here. At 10 o'clock, we make this huge C2. We're going to go way up here. But what are the notes initially that we can look for that tell us this might not be a good trade? Well, we sweep this relevant high. We know that when we sweep liquidity, it weakens the power of the trade to go higher. It weakens the volume, especially when there's such a massive rejection like this. We sweep it here, we consolidate a little. We sweep it again, and then we go down. Then we sweep down here, then we go up, then we go down. This is the seek and destroy profile. This expanding cone. Seek and destroy. Repeatedly sweeping both sides of the range. This is a day where a lot of people just end up losing. Yes, it may look good here, but when we recognize this is seek and destroy and we swept liquidity here, we can know that this is probably not a good day to trade. Let's take some notes here. What do we see? What does this mean? This is a seek and destroy profile. So it's pretty choppy, and after we swept the relevant high, we kind of just screw around. Not anything interesting to take a trade in. And then we don't take a trade, and then we go on to the next day. Each one of these profiles takes me anywhere from 15 to 30 minutes to do. They take a lot of time, but I really think it's the best way you can train yourself. It made a pretty quick change along with some other things that led me to getting a payout pretty quickly. I did 50 of these, and each one taking 15 to 30 minutes. It was well over 10 hours of work, but I genuinely think it made a huge difference to go through a trade like this. It's a completely different way of thinking. You're just studying price, you're looking back, you're trying to recall things, make notes so that when you're in the live market, you can say, hey, remember when we had this sucky seek and destroy profile? What happened the rest of the day? Nothing. So maybe we just skip the day. We recognize that when price is looking like this and this is all we can see, although this candle might look super bullish and we're about to go super high, we can see that sweep, 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 and sweep, sweep, sweep on both sides, and recognize that beforehand, before we're somebody else's liquidity. The goal is to find winners and know what a winner looks like, and be able to repeat the process in live markets. You look at the day, you find the winner, you document the process, and then you repeat. I'm doing another large 60 trade sample. If you're interested in following my journey, I'm going to be posting the results on my X. I post everything on there. Feel free to check that out. If you have any more suggestions for content creation, please drop them down in the comments. I would like to make more content over time and just expand and get to know you guys. I enjoy the community. I think it's a great time. I'm learning myself. My journey is by no means over at all. One payout does not mean I'm profitable, and I have a long way to go. That's why I'm doing another 60 trade study of this because it helped me so much the first time. I want to continue that growth. I don't want to stop just because I reached a taste of success. If anything, it's lit a fire even more because I don't want to lose what I got. And what I did to get me there was hindsight testing, so I'm going to do it again to keep it going. If you have any training or study methods that helped you to achieve profitability and make some money in the markets, please drop them down in the comments. I'm always open to learning new things and expanding my study methods. So thank you guys for watching my first video, hopefully the first of many. If you guys have any content suggestions, please drop them down below. I'll be reading all the comments. It's my first video. I hope you enjoyed. See ya.